So, Jay, for people seduced by your view of the world, I know it's a multi-year view, and a way of expressing it is the commodity market. Iron ore off the highs of the year, base metals, copper off the highs for the year. What kind of moves are you looking for in commodities, Jay?
Yeah, John, you no surprise, hit the nail on the head. That's where we want to focus right now. I wanted to mention the two strengths. One is in the global economy, absorbing one of the most aggressive rate hike cycles in modern history without a recession. That's something we need to pay attention to. And likewise, in the equity markets, particularly in the U.S., new all-time highs. You noted it, 39 all-time highs this year. While tech, the leadership sector in the lead dog, NVIDIA, is down 20% from its high. We have to respect the fact that trends are powerful, and they are moving in the right direction, both in the global economy and in the risk asset markets. So what do we want to do here? How do we want to invest? We want to sell the things that have done well on the idea that there's going to be a recession, because there's not. And so we don't like fixed income. Lisa talked about, 3.7% on the 10-year. Unattractive if the neutral rate is 3%. We want to focus on the context of a long cycle. Sustainable, soft landing equals sustainable equals our global macro blue sky outlook, which we've talked about, 2023 to 2027. We're now focusing on that, not the next quarter, not the next 6 months, the next several years. We believe we're in a setup. And their commodities look really, really attractive. B of A pointed out allocations to commodities are at a 7-year low. Hedge funds are their most short commodities they've been in a decade. So there's a real opportunity there. There's a real opportunity in buying the laggards, things like small cap, things like the non-U.S. markets, which are still 10 to 15% off their highs. China is 40% off its high. I'm not going to say it's going to go to a new high, but we want to be buying the laggards if this is going to be a long cycle, a sustainable growth path, a Fed cutting through 2026. That's what investors need to be paying attention to. We wrote a piece several weeks ago. Zoom out, not in.